Hi Faye, how you doing?
I'm fine, thanks, Steve. How are you?
Good, good. Okay, look, I just thought being a long-standing customer, I just thought I'd show you what we're doing with this entry-level package, and I'm sure you'll be
I'm
amazed by some of
interested
the.
to see it.
Yeah, I'm sure you'll be amazed by some of the stuff we're including in this. Um, and without going into detail, you know that how long we've been developing this package and some of the stuff we
Mm,
put together before. Look, we're really proud of this, but we also want to give somebody just an awesome value product to start in the Forex market, something that's tradable on its own. And this obviously is, Terry and I have actually been trading this thing over the last sort of week since we finally finished it. And it's great. It really is. It's a standalone system by itself. So what I'll do is I'll start down at the
okay,
bottom left-hand corner. If you've got any questions, just stop me. I know that you've seen a lot of the
okay.
components of this before, but feel free to
hmm
stop me or slow me down if I'm going too fast. Um,
Okay.
this we call the market status, as you know. And what this does is we've got
hmm
previous daily ranges, so Friday, whatever, Friday, Monday, Tuesday, Wednesday, Thursday, we're on Friday again. The average is 75. How we use that, as you know, is that we look at the average daily range, and if it's extending into that range, we know to be more cautious entering trades. So it's really handy to have that. And also on that, you've got the current daily range move up, move down, so it sort of gives you an idea where the market's moving as well as visually. We've got the current
Can
price.
I
We've got
say, Steve,
yep,
can I say that I've, on the program that I have, which includes that feature, I think that is so useful. And given you've got the average of the weekly movement, just at a quick glance you can see what each pair has done and what therefore are they likely to stretch that move, and I think that's a fantastic feature.
that's right. And you know that there's a couple of different ways to use that. You know that if you're getting into that average range and the market's acting normally, in other words, there hasn't been something crazy happening in the markets that's just going to drive that range, it's going to get out of whack. But under normal circumstances, it's doing these average ranges, so it gives you an idea. Um, and the other thing that the other thing that we use that for is if we can see we're running really well past that range and it's going crazy, we know that there's obviously something driving. Even without looking at the news, you goes, well, there's something driving this, and it brings your attention more to
Mm,
the market. So look, it's super handy. I use it all the time. We'll move up
mm.
to the tick meter, which I know that you've got. As you can see, the market's pretty quiet now. Now we've got a little bit of a push up here, but market's very quiet. When you've seen this, when the market's busy, this thing just goes nuts, doesn't it? And you can walk past the screen at
Yes,
a
it does.
glance and say, okay, this market's busy as generally on the opens, and that's primarily what we trade, but it's still handy to see that. And you will go into open ranges sometimes where it's real quiet, and it's a good time to stay out of the market. I mean, and that's half the battle, isn't it?
Tell me, Steve, tell me, is that tick meter only relevant, is it individualised for every pair? So when I change the screen, do I get a different tick meter reading
That's right. It's
for
not for the
every
whole market.
pair?
It's just for the specific pair. Then we'll move up to from there we'll move up to the daily opens. Now this is something we've incorporated a while ago, as you know, and it's been an amazing sort of add-on. It's something that you would take for granted, but you can even see it here. You've kicked off the opens here, and you've got some activity. Here it was fairly quiet during this, but then you can see the US open. It's fired up to the upside, so obviously on some sort of news or whatever. And a lot of the times you'll find that will happen during the open time. So you've got the red dotted line is the US Open, yellow dotted line is the Asian Open, and blue dotted line is the European Open. So it is, and the other thing that it does is it actually will act as support resistance. You can see it's come up and bumped its head against this and the triple zeros that we'll go over in a minute, and then moved its way down. And it will quite often come down to these areas and use them as support. It's amazing. Let's say that's had a run up. It will come down sometimes. It will just bounce and hang around this area and stick around this. It's just interesting how it works. We didn't design it to do that initially. It was just to indicate the market open ranges, etc. But it's just worked to our advantage. It's something we observed, and it's become a really big part of how we trade, isn't it?
It
Fantastic.
has, and I must say, when you first told me about the significance of the opens, I'd never traded them as such because they'd never been on my indicator package. And I only half believed you, I have to admit, when you said they were so good, and to keep your eye on them and to trade at the beginning of the market open, the session open. And honestly, I did it, but thought, they can't be that significant. And I have to eat humble pie and say I utterly agree with you, and I do believe they're highly significant.
Oh, no, exactly. They do have, and there's 2 points with that. One is that you don't have to be sitting at your computer all day. So if you just time it to get there just before the market opens, run through all the pairs and see what's been reasonably active during the day, and then basically you only have to be there for the opens. And I know that's what you do now. I mean, it's just a huge difference.
And yes. And the beauty of it is that we're on the other side of the world to a lot of the activity. I mean, of course, we're here trading the Asian Open at our time, but the European Open session time, which is, you know, also a really good time to trade, it just makes it so simple. When you're looking for the dashed line for the open trade, you don't have to be constantly saying what time is it, what time is it. You walk past your screen and there it is.
Actually, what we've done too just recently, and it will be in this, there's an alert that comes up when that session opens. So that's a good thing as well. So
wow.
If you're doing something else on your computer, it'll actually you can turn that on or off depending on the pairs. So that was been a really good add-on. And then we'll move up to the color bars, which is, hopefully it's obvious. Blue is long and red is short. But it's, I mean, let's face it, trading is a very visual thing, and it's really about building confidence within yourself to what the market's actually doing is half of the battle. And of course, then there's a discipline that follows that, which a lot of people struggle with. Then we will move to as we've just sort of brushed over this, the triple zeros. And again, that's something that I know when I mentioned it to you and a lot of people actually, that they're sort of dubious about that. But I've actually got I did a couple of videos in the last few days on the Aussie US. I think I sent you maybe some stuff on that. But anyway, it was so significant. Yeah, it was so significant with just how they affect the market. They really do. It's like it's almost like lines on a football field or whatever. You've got to have some sort of guidelines to work within, and the triple zeros have a huge effect. You'll find that mid-range, around halfway between the triple zeros, you will get a little bit of effect, but again, it's the balance between having too many lines all over your chart, so we don't put them on there. The triple zero is really the main thing that we aim for. So I know I don't have to convince you about that because you've now been working with them for a while.
I agree.
So then we move on to I don't think I've missed anything down here. Okay, then we move on to the support and resistance. Fairly self-explanatory, support and resistance. We've got them on 2 different levels. Here, that's the longer time frame, the shorter time frame. We can see that it's just kicked off, made a slightly higher bottom through here, which quite often gives us another kick up to the upside. I'll be covering that in some of the trading I'll be doing. And, it just gives you like an entry point as it's breaking up through these points, possibly. There's a few different ways to enter this, and we'll be teaching some of that in the training part of this. You can see we're getting a nice little bit of a push off of the Asian Open on the US CAD. Now, part of the reason why I brought this up instead of using one of the other pairs is that we all know just how difficult the Canadian, or the loonie they call it, is to trade. It's a real tricky pair to trade, and you can see like this thing has just picked it now. What you'll see is that this is running on a 15-minute right now. So what we need to do, if the market's noisy at all, instead of getting closer, the first thing we do is step out one time frame. I know that you know that, but I thought I'd mention it in here. The other thing that really the simplest way to be trading this is if you're trading a 5-minute, what you do is you step out, you see the noise through here, so you're not getting any significant moves. So if it's noisy like this, you need to be looking and going, okay, what is the 15-minute doing? You can see the 15 minutes just meander around through here. So if you want to be trading this thing, we generally step up one time frame. So if you were going to trade it on with this, the way we've set it up, you don't need to be looking at particularly dailies or weeklies or anything like that. We just want to be trading what the market's doing. And as you know, by one of the newer students that we've got in the mentoring part of this, that that they just do what we say they do, and how well is she doing now? Amazing, isn't it?
Yeah, very.
She's really
Very.
picked it up well.
She's not intimidated by it because I think she's come in, so she's an absolute new trader to currency.
Yes.
And I'm really, it's fascinating to watch her because she's utterly unintimidated and just says, oh, I'm only doing what I've been told to do.
Yeah, the market's going up, I need to buy it. The market's going down, I need to sell it. I need to have a target level around about this. I need to, this is what happens if the market starts to turn. This is how I use the stops. I mean, it's really just keep it simple, isn't it? Which is why this is all, this is clean and tidy. I know that, we've got some add-ons that we offer in here, but we won't cover that today. But I mean, it's really, isn't it? It's just a matter of keeping it as simple as you can. So we'll try and keep this short. So we'll move over. Yeah, sorry.
Just before you move away from the support and resistance lines, the blue and the red line, they look fairly simple, fairly basic, innocuous, but in fact they are so useful. And that's exactly how I trade when they break above the blue or below the red with other indicators telling me to do so. That's when I enter, and that's brilliant.
Yeah, well, that gets back to sorry.
Don't be fooled by the simplicity. Don't be fooled. I say to new clients, do not be fooled thinking, oh, this is a very simple basic program. It's highly significant.
Yeah, that's right. With the people you've been referring and stuff. And here's the other point. I mean, everything's designed to work together. I mean, when the market's active, that's super active during the the opens and stuff. I mean, this is fairly quiet, and the Aussie Canadian never really has a lot of volume. If you put that down, you can see how patchy it is here in a 1 minute. And actually, you can see it's a good example. So you've got a bit of a push to the wrong side, opportunity to enter it here. You've got to push off the open. If you really wanted to get in and scalp this thing, it can operate on a 1 minute. It actually functions reasonably well on a 4-hour chart, even, as you can see. Again.
Steve, you didn't mention the arrows, the direction arrows.
Oh yeah. Okay. So, thanks. That's why you're here. Remind me. Okay. So. Here we are. So this is change of direction arrows, which actually incorporate with the blue arrows. So these do have an alarms on them. So this will set off an alarm when this changes direction. So if you're doing something else on the computer, or you've got the volume up and you've got it on a laptop in the lounge or something like that, it will indicate that we've had a change of direction. What I suggest is that people initially, because this thing it doesn't hog a lot of power on MT4 like a lot of programs that we've had previously. We've really trimmed this down so that it's very nimble. So you can actually have charts open on all of the major pairs, all the stuff you're watching, and it won't be a memory hog. So just that's what I mean. I've only got a couple open here now, but a lot of the time I've got I might have 10 or 12 pairs open and just waiting for alerts, and then run over and just see what's happening in that particular pair, and then make decisions to if that's what I want to be trading. And then we've got the previous highs and lows. So this is, you can see they're just initials. So that's the previous weekly high. We've got this is the daily low in this current range, daily low. Some of them are labeled. We ran out of buffers on some of this stuff, but the majority of them are labeled. Previous daily low, you can see, is here. The reason why we didn't take these all the way across is that we're trying to keep the charts clean, and you can always just do this, have a look around, and you can just see, okay, that's that. For instance, previous, like that's the previous day. These highs in here somewhere, right there. So. So they're just handy to have, and there's a reason. The reason why we've got them on there is that because we know that we need to know that the market stopped there at some other times, because we don't need to know why it stopped there. We just need to know that the fact that it has stopped there, because there is a chance that it will have a reaction around that area again, because the bigger traders, they keep an eye on those levels all the time. So if the market has reacted around that area before, there's a good chance it will react around that area again. Some of the times it's doing it is because it's just running at a grunt in the daily range, as it probably was here, and it's had to take a breather, which is, incorporating this average daily range thing. So it's pushed a little beyond it here, and then it's had to take a breather. That's kind of a good example of the rubber band. But we still need to know that the market has, I mean, that's the weekly high and the previous daily high. Today's Friday, so that's the weekly high. It's probably going to have some sort of reaction around that area. So, really handy.
Yes.
And again, we just sort of try to keep the tools on here that people really need without getting too carried away to trade this thing effectively. The other thing is, and I know that when I mentioned this that you were amazed that we've included this because the amount of time that we put to build this. And that's probably worth more than we're charging for this whole package just on its own. We take it for granted now because we've had it for a while, but is the automatic stops. What I'll do is I'll just do a buy trade in here. It's a bit slow.
When you told me you were including this, I was shocked. I was very shocked because you've mentioned to me how much you're going to charge for this, and I think the whole package is so outrageously cheap, and I mean that because you heard my outrage at the price.
Well, look, this is
and
there it is. It's kicked in. It really needs a market tick, so the market volume's down a bit. So that's just stop loss at this stage, and there's your take profit. They're set at 30.30 by default, and they're fairly easy to adjust.
The two red lines.
The two red lines, yeah. Well, that's right. Look, this is an introductory offer. We're not going to do this thing where we say, look, the first 50 people or first 10 people or whatever getting it at this price. We're going to keep it open for a reasonable period of time, and it will be going up. I mean, it is a crazy price, but then again, we want to get this out thing. We've just figured out how to do the activation automatically, so we want to be testing that, and we want to get this product out there to a few people, and then of course we've got other stuff that we can offer them. But I mean, look, this is tradable and usable by itself. You don't really need anything else that we offer. I mean, looking at this, because you've seen all these components before, of just how tradable this is. So let's look at this. What we'll do is
I do because can I just say when I first started currency trading, I was using the freely available indicators, the MACD, Bollinger Bands, moving averages, the whole lot. Whatever was available, I tried. And I had a chart that was so cluttered and so cumbersome, and they were all lagging indicators, and I didn't know where I was. Every now and again, I'd jag a positive trade.
Yeah.
These, what look like incredibly simple indicators, are so much more powerful. It's ridiculous.
Well, there's a total of somewhere around 6 years worth of work in this. As you know, we've built hundreds of indicators and thrown so much away. In theory, you think it's going to work, and then when you put it on the charts and test it, it just doesn't work. You can see we've had a nice little kick-off, a good example of the Asian Open on this. We've had to change the direction, so it's meandered through here at late in the US session, and then kicked off a little bit to the upside. Now let me cover something. I wouldn't have entered this trade up here, particularly when this, it's fairly quiet. But this is just an example of the trailing stop, or the draggable stop. So to activate it, you just click it, as you know, and then you can move it to wherever you want. And the next click, it will actually move the stop to that area.
Yes, that's
there. It is. Okay, so
makes life so
and then
much easier.
That's right. And the other thing that I'll do is, if the market's moving really quickly in a direction towards the take profit, what I'll do is quite often I'll drag this away from it and then follow it up with the stop, so that you're actually almost corralling the thing into a corner where you've locked in profit. There's nothing like the feeling that when you've moved the stop up to break even or a little bit of profit in the trade. The other thing that's in that, because this is actually an expert advisor properties, the standard thing is set at it's got a trailing stop in here at 12 pips, and the take profit by default and the stop loss is 30. I mean, that's something that you can adjust, or you can adjust any of this. So what I actually do, if I'm really scalping it, I'll actually set this to 15, 15, 12, and then I'll make that into a template, so that so I'll just look at that. We got a little profit there. I'll close that trade. It was just an example of how that works, but it's pretty well. I love it. I mean, you imagine all the fiddling around we used to have to do to put a stop on in the first place, and then to adjust it during the trade. I mean, gosh, we really do take this for granted now, and you know how much work went into building this.
Well, I don't. I promise you, I do not take it for granted, because I used to make mistakes in, how far away, I was trying to calculate it, let's say 20 pips, and I'd get it wrong. this is so visual, and I think it makes it so much easier to easily manage the trade and manage your trade so, as you said, it remains safe and you can give it room to move, but yet you are going to lock up the trailing stop loss, so you're not going to be giving away too much if it does turn back on you. And it's so visual and so simple, and you're much more inclined to play it safe when you've got, you know, drag and drop stops.
Yeah, exactly. Actually, while we're here, I'm going to give you a little trading lesson too. You see the with the close window up here. What I'll generally do is, if let's say I'm getting close to trading a trade and I've got a good bit of profit locked into it, what I visually do is I actually run my eye through this and I look at these higher lows right through here.
Mm-hmm.
So providing it's still doing that, I'll actually stay in the trade and I'll visually go, okay, if it moves back down to this level, I will actually then close it. And what it'll do actually, so now I would run it to this level. So if you're getting close to getting out, like say, okay, now right now we're moving around. So if I've locked in, okay, so we're right, probably a little bit of news come out. So I'm watching this. It's a really good example. So now if it comes back down through this level, I would definitely close it. But by doing that, you're getting the last little bit out of the market. This is really, you know, anybody that's looking at this that doesn't buy this package even can use this. So if you're scalping particularly and you want to get out and you want to look at an area to get out, so it's falling around a little bit of this area, probably a little bit too much for me now. So I mean, I don't know what's going on with it. So let's say that I've got 15, 20 pips in here. I would generally actually, if it breaks this area, gives it a bit more room. Okay, we're going to break it. So now I'm out. Right. Okay, so that's closed the trade. And it's just generally the way of squeezing that last little bit of profit out at the top of a move. I mean, if I was going to enter this, one of the things is, you know, as we know, it's a discipline. I would either enter it here or here. I wouldn't have entered it way up here. And that would have been, you know, quite a good little trade. Again, you know, the primary reason for that is this system is to scalp, but you can trade on a longer time frame, and we designed it with that in mind. So, as you can see, Fabio, a good little package, and I don't know if I showed you that before, but that's quite a sneaky little way of exiting a trade, isn't it?
It's great, because exiting a trade can be very confusing and challenging.
Now you don't want to do that early in the piece. That's generally when you're happy with the position and happy with what you've got out of it, and maybe, you know, let's say you're sort of close to your target in it and you want to get out. And you're thinking about getting out, you can sometimes squeeze an extra 7, 10 pips out of it by just watching those high tops and lows in the tick part of the trade order window. Got it right the third time. Of the order window. You can see. Yeah, you can see it's still meandering around in this area now. So anyway, really that's it. What do you think? It's a good little package, isn't it?
You know, I'm impressed, and I remain impressed. And I just think it's a bargain, honestly. And
yeah.
You know, that's an absolute genuine comment, because I have seen the progress of this package from a previous indicator set that I thought was great when I saw that, and this latest version is truly amazing, and I think an utter bargain.
Terry and I discussed this, and we've gone, we want it to be an absolute no-brainer when they look at this, that people just go, okay, you know, for this sort of money, I'd be, you know, I mean, the stop alone is worth that, right? Without all the other bits and pieces that are in there.
I know.
So, you know, that was the point. And we look, as we discussed, you know, before this meeting, like it's a different world out there. We've got to, you know, the world has changed. People are much more careful. They're much more cautious in spending money, and we appreciate that. Plus, here's the point: we've got to the thing where we can activate this thing automatically, and it's going to change life for us, because we don't have to go in and install it in the people's computers and things like that. So, you know, we can sell this, you know, we can sell it over the internet, you know, 24 hours a day more or less, and if somebody buys it, they'll just get the instructions, they'll install it and activate it. So, but you know, having said that,
I understand that.
Yeah, having said that, I won't be staying at this price forever.
No, and I was just about to say that anyone who is a reasonably or even, you know, slightly experienced currency trader, they're far more likely to see the value of these indicators that we've just been discussing.
Yes.
Because they've no doubt they've tried all other things. I mean, currency traders are notorious for scanning the world for the next, silver bullet.
Next shiny object. Yeah.
That, and they will see because they're experienced. A new person who has no experience whatsoever may underestimate the value of what they're looking at because they don't understand that, in fact, the simplicity of this package and the simplicity and clean lines of the screen are in fact so valuable. But as I said, as we were discussing, the new trader that you were talking about who's doing so well because she's just following basic instructions.
Yes.
She's just using what's there, and it works.
This is a nice little push off the open here, isn't it? It's a good example. Here's an example of the open. So, I mean, obviously this was some news coming out in the US. And there wasn't really any fresh signals here in this time frame. But if here, you've got the open, boom, you've come up breaking through this area. Now it's pushing up and it's going to test the weekly high and the previous day high, I would say. And again, if I was entering this, I wouldn't have entered it where I did, which is why I got out of it quickly, and it was just an example anyway. But I would have entered it sort of around this area, and then you just follow it up. I mean, this is a really good example here, actually. And that's the beauty. And this is the US Canadian, which, as we mentioned before, I mean, a while ago I wouldn't have attempted to trade this thing. Every time I traded it, it's got the ability to kick you. But with this, it is really tradable. And one of the things that we do during the training is that we teach you to look at what's been active in the previous sessions, and that's what you look at in the current session and things like that. So it's really easy to filter down to the 4 or 5 pairs that you're going to be watching during those sessions, and it just makes life easier. You know that we've got another add-on tool that does it by itself, but again, we won't bring that into it here. This is a standalone system, and it's very, very tradable, which is what we do. We wanted to get really, really a really simple entry point into the market that's actually tradable. We just didn't want to give you something that was a set of tools that you actually couldn't trade. That was a discussion that Terry and I had. That what do we want to do? We want to give them something that's completely standalone that they can take and trade straight away, and be making money with discipline. Everybody, with discipline.
Well, this should go extremely well, and I hope people are impressed because I am.
Yeah, it's great. All right, Faye, thanks for that. I appreciate your time.
My pleasure. My pleasure. Bye.
Talk soon.